Hello everyone, welcome to JAIIB CAIIB English Medium by Officers Adda247. This side CRT and I hope you all are doing great. As you know that we have started one very particular series known as Tataastu for our upcoming October 2024 JAIIB exams. So till now we have covered so many units from Unit 1 till Unit 13. And today we are going to start Unit 14. But before that, let me tell you that if you are a new candidate to this channel, please subscribe it, because this channel provides you with all the required planning, strategy, all your special marathons, all your special series like this one to clear your JAIIB CAIIB in your first attempt. But for that, you have to subscribe this channel and do follow this channel, because everything, not only AFM, all your remaining subjects, RBWM, PPB, along with your IE, IFS, we provide you special sessions known as Tataastu. But for that, the subscription of this channel must be with you. Along with that, do like this session if you like this whole kind of concepts that we are bringing to you, and do share with your friends and colleagues. So today we are going to start Unit 14, which talks about company accounts. So before starting this company accounts, let me tell you that already we have understood what is this accounting, what is bookkeeping, what is this accountancy. So already we have understood that how to make accounts, correct? How to start with your identification of any entry. After that, how we are coming for journalizing in your journals, how we are going for the posting in your ledgers. After that, how we are preparing a trial balance. In that also, if there is some arithmetical error, how we are going to rectify it. And today, after that, we are going to know that how the company accounts are prepared. So remember, this unit is very important unit. In each and every exams, you can see and you are going to observe that this unit at least carries around 10 marks in your particular exam. Okay, so let's start by understanding what is the definition of company. So as per section 2 of subsection 20 of the Companies Act 2013, it is defined as a company incorporated under this act or under any previous company law. This act means Companies Act 2013 or under any previous law. Because before Companies Act 2013, we used to have our old Companies Act. If any company is registered under that act, then also they are going to be known as a company. Okay, so we have to understand that company must be incorporated under which law? Under the Companies Act 2013 or under any previous law which were actually existed during that time, before 2013 especially. So that is the definition of company. Simple and sweet definition. Chaliye. So what are the features of company? Now this is very important for your exam point of view. Chaliye. So let's start with the first type of feature, that is incorporated association. Your company must be incorporated under Companies Act 2013 or under any previous law. Under any previous law. Okay, that is the first feature, that your company must be registered, your company must be incorporated. Next feature is, it is artificial person. It is what? Artificial person, because as soon as you enter any transactions with a company, you are going to see a proper valid contract with that company. The company holds artificial person which is actually valid whenever you enter in any contract. Okay? So that is again a nature, because it is not at all human thing. It is your artificial person. Next is your perpetual succession. What is the meaning of perpetual succession? See, perpetual means infinity. There is no end date decided. No, though we have starting date of incorporating of any company, we have starting date, but we do not know any end date of that particular company. And the thing in this is that whoever owner started this company, whether that owner is present or not, your company will just go on generation to generation. That is what perpetual succession. It will never be affected with the existence of this owner or not. Like if we take the example of Reliance company, who is the founder of Reliance company? Dhirubhai Ambani ji, correct? Now he is no more between us. So after that also the Reliance company is run by their children, correct? Now they are handling all those things to their grandchildren. So that is the feature of perpetual succession. Now coming to the next feature of the company, that is common seal. Now what is this common seal? Like we human beings have some signature, correct? So as company is your artificial person that can enter in any contract, or that contract can also be valid. So for that we require some kind of signature. So on behalf of the company we have to use the seal. But nowadays using the seal is not at all compulsory as per Companies Amendment Act 2015. Okay? Directors can also do the signatures. Apart from that, board of directors can also do the signature on behalf of the company. That will also a valid contract on behalf of company. Next is limited liability. Under this, whoever holds the equity will be liable up to the promise amount only. Means what? See, if you invest in any company which is listed on stock exchange like Bombay Stock Exchange or National Stock Exchange, whenever you purchase any shares, okay, and after 3 or 4 days that company bankrupts, so the owner of that company won't come to you and tell that give your TV, give your cell phone, give your all the households. No, only the invested amount of shares will be lost. That is what limited liability. Okay, up to the shares you have invested, up to the shares you are holding, that will only be lost. That is the feature of a company known as limited liability. Next is common seal. Already we have covered. After that we have the next feature, that is separation of management from ownership. Now owners who actually invest in the equity of the company and the management actually handles daily working, decision making, each and everything. So the features of company says separation of management from ownership. So your management will be different from your owners, correct? Owners and the management will never be the same in the company. It means management will be handling your daily decision making, all your targets, goals, it will be decided by the management. Owners will never going to interfere in that side of the business, correct? That is the next feature of a company. After that, next we have transferability of shares. Now for understanding the transferability of shares, we need to understand that our company actually divides into 2 type of companies, that is public company and the next one is private company. Now what is this private company? In which no public can directly invest. No public can directly invest in this, okay? And they are not at all listed on any exchange. What is this exchange? Exchange means National Stock Exchange or Bombay Stock Exchange. Okay. So that is your private company. And public company means, I'm telling you the law definition. Law defines public company as a company which is, just a second, give me a moment. Yes, which is not at all private company. Yes, this is a definition given under your Companies Act 2013. So under this, if you have understood the public company and private company, so as per that, if you are a private company, I am writing PVT for the private, you cannot transfer shares. Okay? But on the other hand, if you are a public company, shares can be easily transferred. Like if you invest in the Reliance company, you can easily trade, correct? In morning you can purchase it, in noon you can sell it. Easily you can transfer it because all those companies are public company. Now next is separate legal status. Now what is this separate legal status? I hope you have seen the second unit of your AFM that we have already covered. Under that we have seen a business entity concept in which we say the owner is different and the company is different. Okay? Owners are different from the companies. So as per that, for the company, we have the feature known as separate legal status. The same thing, in which your owner different from your company. So under the feature of a company, it is given as separate legal status. But under accounting concept, it is given under business entity concept. Remember, both the things are saying same thing, that owners and the business company totally different. But for the companies, we have to use the feature known as separate legal status, and for the accounting concept, we have to use the term known as business entity concept. Okay. Now, next is membership. For this membership, again we have to bifurcate into private company and public company. Remember, private company, minimum number of members requires 2 and maximum members in the private company can be 200. Okay? But for the public company, minimum members requirement is 7. But for the maximum, there is no limit. That is the feature of company. That is the feature of company under membership. Okay? Remember one thing, private company minimum members 2. Private company maximum members 200. On the other hand, if you are a public company, minimum members requirement 7. On the other hand, public company membership requirement maximum limit infinity. There is no limit. Okay? So that is the feature under membership. Now next is minimum paid up capital. Before it used to be 1 lakh and 5 lakh. But after the amendment of 2050 of the Companies Act 2013, this minimum paid up capital requirement removed. Okay? So remember, these are the features of a company. First is incorporated association. Your company must be registered under the Companies Act or any previous law. Next is artificial person. That's why we are entering in a valid contract with your company. Next is perpetual succession. Companies won't be affected by the existence of founders or whether they are continuing with the company or not. Okay? So ultimately, as soon as we are registering the company, we know when we started the date, but we don't know any end date for the company. Next is common seal. Like signature, company is also having their own signature under common seal. Next is limited liability. After that, we have seen separation of management from ownership. Owners who hold the equity will be separated from the management. Managements are the one who actually handles their daily functioning of a company and they decides the decision making thing. Okay? Next is separate legal status. The owner and your company will be different. That is stated under separate legal status. Next, we have seen transferability of shares. Transferability of shares, for that we have to identify whether your company is a private company or your company is a public company. If your company is a private company, then your shares cannot be transferred easily, because the company won't be listed on any stock exchange. But on the other hand, if you are a public company, then your shares can be easily transferred. You can purchase in morning, you can sell it next day. That totally depends on the holder of that equity. Okay. After that, we have seen the membership. For the private, minimum membership is 2, maximum 200. For the public, minimum 7, maximum infinity. For the minimum paid up capital, there is no such requirement after the Amendment Act 2015. So these are the features. You have to retain all of the features of a company. Okay, chaliye. Now we are going to start with different types of companies. To understand different types of company, we have to understand A, based on incorporation, B, based on ownership, C, based on liability. So the first, based on incorporation, divides into chartered company, statutory company, registered company, foreign company. Based on ownership, it is divided into private company, public company, government company and holding company. Based on the liability, it is divided into company limited by shares, second company limited by guarantee, third one is company with unlimited liability and subsidiary company. So these are the different types of company we have to understand, and we have to retain all this based on the incorporation, ownership and the liability. So let's start with the first type of company based on your incorporation. First is your chartered company. Any company which is established, remember, any company which is established under a special charter issued by any king or emperor or any head of state like European countries, East India Company or Bank of England. If this type of companies are there, then it is chartered company and it is based on your incorporation. Okay? After that, second type of company is statutory company. Any company which is created or incorporated by a special act which is passed by, remember, special act, but it must be passed by central or state legislature. Any of the legislatures, whether you are central or you are state. And the statutory companies are owned by government and are given independent legal status. Okay? Like Life Insurance Corporation, LIC of India, Air India or Food Incorporation of India. Remember, all these are the examples given in your IIBF book. So we have seen two types of companies based on incorporation. First is chartered company. Next we have seen the statutory company. After that, third type of company under incorporation is registered company. Registered company, which is actually registered under the provision of Companies Act, is known as registered company. Like Tata Consultancy Services Limited, Wipro Limited and so on. Remember one thing, if directly it is written limited, means this is a public company. Okay? If only limited is written, that means it is public company. And if after any company name, suppose ABC Private Limited is written, then it is private company. This is the way we identify whether it's a private company or whether it's a public company. Okay? If directly limited is written, then it's a public company. Means it is listed on your stock exchange. Okay? If there is a private limited is written, then it is a private company in which shares are not at all freely transferable. I hope this is clear to you. Now, next is foreign company. What is this foreign company? A foreign company is a company which is incorporated outside India, okay, but has a place of business in India like Hong Kong or Shanghai Banking Corporations Limited. Now, what is this foreign company? Let's take an example for this also. Okay, I'm erasing this side. So, this is India, okay? And if any company registered outside India, okay, suppose Amazon. Though Amazon is working in India, but Amazon is not at all Indian company, correct? So, if this Amazon comes and do the business, then this Amazon is foreign company for India. Okay? On the same basis, suppose Reliance Industries, they are registered in India, correct? So, this company is our registered company. But if this RIL goes to this foreign and do the business, then for that particular company, this RIL will be foreign company. Okay, like foreigners we call them. If anyone comes outside India, we call them foreigners. On the same basis, we have to identify for the companies also. Okay, so all these are your foreign company. So based on the incorporation, we have chartered company, statutory company, registered company and the foreign company. Chali. After that, based on the ownership, different type of companies that we have to learn now based on ownership. First is private company. So private company under their articles in which every detail is written related to that particular company, says except in case of one-person company limits the number of its members to 200. That we already seen in features of a company, correct? As per this line, this says minimum we require 2, maximum we require 200. But the except if you are a one-person company, then member will be only 1. That is given in your first point. Second point says it restricts the right to transfer its shares. As I told you, any company which is a private company, and how we are going to identify it? Suppose, let's take next example. Suppose this is PQR Private Limited. If this word is written private, then only we are going to say this is your private company. Correct? So in this, your transferability of shares is actually restricted. Next is, it prohibits any invitation to the public to subscribe for any security of the company. Already we have understood, because they are never going to be listed on your stock exchange. Correct? After that, next is public company. So under section 2 subsection 71 of your Indian Companies Act 2013, it defines as a public company as a company which is not a private company. As I already told you, the definition which I have written here is actually a legal definition under your Companies Act. Okay, so how we identify the public company? Like Tata Consultancy Services Limited, Wipro Limited. If just limited is written, then this type of company is your public company. This type of company is your public company. Okay, now next is your government company. Very important, government company. See, you can easily identify private and public company, but for the government company, we have the limit that any company in which not less than 51% of the paid up share capital is held by central government or by any state government, or partly by your central government and partly by one or more state governments, is known as government company. What is the meaning of government company? See, any company in which if central government, state government, partly central, partly state, if they holds more than or equal to 51%, then only we are going to call it government company. Okay, let's take an example for this. If your central government holds just 49% of paid up share capital, then can you tell me this company is what? If central government just holds 49% of any company's paid up share capital, now can you tell me this company is what? Government company? Yes or no? The answer is no. This is not at all government company. Okay? On the other hand, if this state government plus central government, if together they hold 51%, now can you tell me whether it is government company or not? Both central and state governments are holding 51%. Now can you tell me whether it is government company or not? Answer is yes. Because they are saying not less than 51%, means even if they hold 51% also, then also it will be your government company. I hope it's clear. Last one is your holding company. Any company in relation to one or more subsidiary companies means a company of which companies are subsidiary companies. Now for that we have to understand what is the subsidiary company. So I am going to tell you here only. Suppose this is A company. Okay? Here we have B company. This A company controls board of directors. Okay? More than half of the board of directors of this B company are actually appointed by A. And A company controls every decision making of B. If this kind of situation is there, then A is your holding company and B is your subsidiary company. Okay? In this, they hold more than 51%. This is the situation. Then the company who is controlling the other company will be your holding company. They are making a hold on other company. Okay? And the company who is actually following the orders of some other company, that company will be known as subsidiary company. So this is based on the ownership. Chaliye. Next we have based on the liabilities. Company limited by shares. Company in which liability of its members is limited by the memorandum to the amount, if any, unpaid on the shares respectively held by them. So ultimately by the memorandum, like we have the articles of association, on the same way we have the memorandum of association. Memorandum of association tells how the company will be performing, what are their objectives, what are their paid up capital, all these things. Okay? And it is shown to outsiders. And article of association tells how the internally all the things will be performed. So that is the main difference between memorandum and article. For each and every registered company, they require MOA along with AOA. Chaliye. So now, under MOA, if any liability of its member is limited, but the limited only if any amount is unpaid on the shares respectively held by them, then we are going to call it as company limited by shares. Next is company limited by guarantee. Company in which liability of its member is fixed to a certain amount and he is liable to pay that much amount in the event of winding up. Okay? Winding up of the company. This amount is called guarantee. Suppose, example, let's take for this. This is ABC Private Limited. In this, Mr. Q is there. Okay, and he guarantees that he will give 100 crores if anything happens to the particular company. So in case of winding up, suppose the liability on this company is 500 crores. Okay, means they have to pay 500 crores. They have the obligation. So for this 500 crores, Q will only be liable for 100 crores. Okay, this Q will be liable for only 100 crores, and remaining 400 crores will be paid by ABC Private Limited only. That is company limited by guarantee. Next is company with unlimited liability. Company in which the liability of its member is unlimited. Such a company can be incorporated with or without share capital. Now when this, suppose again let's take an example. We have PQR Limited. Okay? This company, which is PQR Limited, in which we have PQR. They are the shareholders and they are holding the shares of this company. If this company winds up, okay? This company winds up, so there is no limit for them. Suppose PQR Limited has to pay around 500 crores. So all these things will be taken by this PQR owners. That is what unlimited liability. Okay, but in guarantee, we give exact figure that we will be liable for this much amount only. This is based on the liability. Now I hope it's clear to you all. Chali. So these are the different types of companies that we have to remember. Now we have different classes of share capital, that is equity share capital. Now equity share capital again divides into voting rights or differential rights to a dividend, voting or otherwise. Okay, again your equity share capital. Equity share capital is your owner's capital. It is divided into with voting rights or without voting rights also. And next we have, that is preference shares. Now what are these preference shares? They get the preference over equity. They get preference over equity. Like what? Like they will be getting fixed dividend. Okay, they will be getting fixed dividend. They will be having some limited life, like 5 years, 10 years. Okay, so all these are the features of your preference shares. Now, if there is a situation of winding up, so firstly, all the monies will be distributed to outsiders. Okay. During winding up, firstly, the distribution of money will be to the outsiders, bank loan, creditors, suppliers. Firstly, we have to pay to all these type of outsiders. After that, whatever amount is left, that will be given to your preference shares. And if anything is left, then only it will be distributed to equity. Okay? So that is what preference shares. Now again, these preference shares are classified into cumulative or non-cumulative, redeemable or irredeemable, participating or non-participating, convertible or non-convertible. Now what all these are? Let's understand one by one. Cumulative means the right to receive your dividend will never lapse. Means what? Suppose this is your year 1, okay, in which your company earned a profit. You know, the profit is used to give the dividends. So first year, dividends are distributed from this profit, no issue. In the second year, again the company earned the profit, again the distribution of dividend made easily. Now third year, company are into a loss. So this year they cannot distribute dividend. correct? For that they require the profit. So in the next 4th year, as soon as they earn the profit, they will be paying the 3rd year dividend before distributing 4th year dividend. That is what cumulative preference shares means. Their right to receive never be lapsed. Next is non-cumulative preference shares. Non-cumulative preference shares are those shares in which, if in any particular year, if you incur any loss in your company, there will be no carry forwarding of that particular year preference dividend. Okay? Means there will be no liability in the subsequent years that you have to pay earlier year's dividend before distributing the current year's dividend. That is what non-cumulative. After that, redeemable means whenever preference shares are issued for limited life, that is redeemable. But whenever preference shares are issued without any specific lifetime, means for unlimited, for perpetual, if you are issuing this preference shares, then it will be your irredeemable preference shares. And generally in India, we are not at all allowed to issue irredeemable preference shares. Chali. After that, next is participating. Participating and non-participating depends on, even after getting fixed dividend, if you are getting extra amount from your equities portion, then you are participating. Non-participating means you are only going to get fixed dividend. Okay. After that, last one is convertible. Means after few years, you have the option to convert it into equity. And non-convertible means there is no option for the conversion into equity. So these are all the different classes of share capital. Equity share capital and a preference share capital. Chali. So based on this, let's solve few questions. Yes. The first question is, which of the following is not a characteristic of a company? Option A, artificial person. Option B, unlimited liability. Option C, perpetual succession. Option D, separate legal status. Remember the features, okay, the characteristics we have seen in the second slide. Based on that, you have to tell me which is the correct answer. Take a moment and give me the answer, please. So, in this, your correct answer is unlimited liability. In place of unlimited liability, we have the limited liability. Okay, that we have already seen in the features. So the correct answer of this is unlimited liability. Artificial person, correct? Companies having the feature of artificial person, they are able to enter into a valid contracts also. After that, perpetual succession, whether owner is there or not, company will go on. After that, separate legal status, your owners and the company will be different. Okay, so that is what separate legal status. The correct answer of this is actually B. Chali. Next is, which of the following characteristics of a company refers to its ability to exit independent of its members or shareholders? A, limited liability. B, artificial person. C, perpetual succession. D, membership. In this, they are asking which is the characteristic of a company in which the members, the shareholders, are independent. Tell me, limited liability, artificial person, perpetual succession, or membership. As per this, which is your correct answer? As per this, your correct answer is option C. Okay? Whether your member, your shareholder is there or not, your company will go on and go on. Okay? That is what perpetual succession. Next is, which characteristic of a company allows its ownership to be transferred easily through the sale of shares? A, transferability of shares. B, minimum paid up capital. C, incorporated association. D, common seal. Tell me, as per what feature you can easily transfer the shares? Though under that we have the two bifurcations, that too in a public, in a private, but overall, in which point we have seen this, that we can transfer the shares easily? That we have seen under transferability of shares, correct? So correct answer is option A. Next is, which type of a company established under a special charter issued by the king, emperor, or the head of a state, like East India Company? So option A is your statutory company, B is your registered company, C is your chartered company, D is your foreign company. Tell me, which is the correct answer? Which type of a company established under a special charter issued by the king, emperor, or a head of a state? The correct answer is your, tell me, chartered company. Correct? Like East India Company. Chali. Next is, a company created or incorporated by a special act passed by the central or state legislature is known as A, foreign company, B, registered company, C, chartered company, D, statutory company. Tell me the correct answer for this. In this, they are asking special act passed by the central and the state. For this, we have taken the example of LIC, or Food Corporation of India also. So that company is your statutory company. Correct? Chal. So this is all about your Companies Act 2013, but this unit is very important and this unit is actually lengthy. This is not the end of this unit. In this, we have so many things that we have to remember. But for that, if you want to learn in detail, so you can visit to our Adda247 site, in which we provide you JAIIB Mahapack, in which we provide you the batches. This batch is basically in your Hindi plus English. This is your increment batch, which is based on your English language. So ultimately, if you ask us that which is the best and penny share for clearing our JAIIB, then that batch is your JAIIB Mahapack 2.0. As it provides you 600 hours of online live classes, all your increment batches, all your future revision batches, all your future crash batches. Along with that, if we align special classes like numerical batches, like case study batches, all these things will be freely available in this JAIIB Mahapack. Okay? Along with this, we provide you with the test series, e-books, 1300 plus videos. In the video sections, you get all the marathons, all the Chalisa, all the special classes that we already aligned for our earlier candidates. We are freely providing you. And remember, in this, currently we are giving you the offer. If you use the code Y895, as soon as you apply this, you are going to get 81% off. But the offer not ends here. Okay? So, I am going to tell you one very special thing through which again you can increase your discount from 81 to 82. How that can happen? Let me tell you. For that, you have to download the Adda247 app, as that app is freely available in your Play Store if you are Android user or iOS user, freely available in your Play Store. From that, you have to use this Y895. As soon as you use this, you are going to get double validity along with 82% off. But remember, this offer is for a time period only. Go fast and enroll in the batches, because classes already started, and you know that already we are on the end of August. Only we are left with September and few days of October. Chali. So let's wind up this session. I hope you have understood what the company accounts is, what are the different types of companies, and what are the features of the company, and I hope you have revised through the questions also. Thank you for watching. In case you feel any doubt, you can ask through the comments also. Thank you everyone.